We've got some big news coming out of the NASDAQ and New York Stock Exchange. Big news coming out of the NASDAQ and New York Stock Exchange announcing their everything exchange. Essentially, NASDAQ is working with Kraken's parent Payward on a framework for publicly listed companies to issue tokenized versions of their shares that still preserve normal ownership and voting rights. This comes as news from Intercontinental Exchange, also known as ICE. Not that ICE, it's a new ICE. But they've taken a strategic stake in OKX at a $25 billion valuation round that they filled recently. Also planning tokenized stocks and crypto futures that tap into OKX's 120 plus million user base. But the goal of the everything exchange is essentially what we've been talking about for a long time. One of the main drivers for tokenizing real world assets, as they're known, essentially creating a unified 24/7 marketplace where stocks, bonds, funds, and crypto can all settle instantly as tokens that represent those assets are all shared on the same infrastructure instead of in separate markets within limited business hours. So the January SEC staff statement clarified that tokenized securities have the same legal status as their paper counterparts, and this gives incumbents the green light to move into tokenized equities. So this is huge signal for the tokenized RWA market, and the fact that the New York Stock Exchange and the NASDAQ are getting into it means that the floodgates are open. Now everyone's been given the green light. Let's go ahead and tokenize stocks that normally were traded between the hours of 9 to 5 in New York time, and this opens up an entire world of possibilities.
Yeah, and it might be a hot take, but I don't know how I feel about that. Like, I think there is some beauty in having off time where you're not looking at the markets, but I guess that's just not our reality anymore. Everything's financialized, everything's 24/7, the news, prediction markets. So of course people want to be able to trade that information and that, take advantage of that asymmetry in information. But I think one of the most interesting things here, I saw something the other day. It was right now tokenized stocks are about $1 billion market. But a Ripple study showed that this could grow 53% annually to 18.9 trillion by 2033, with NASDAQ and New York Stock Exchange seen as key to fixing current liquidity problems. So this is also in line with one of our theses, and we actually did put an article out 2 weeks ago about this, tokenized assets, tokenized stocks. So definitely something to keep an eye on. But I think this is the future of crypto. This is the unification of Wall Street and Crypto Street, or whatever you want to call it. That's happening right now.
Yeah, it's only a matter of time until the NASDAQ launches their own prediction market as well.
Yeah, you joke, but I think I actually saw something about that, but maybe I'm hallucinating.
Oh, no.
There's so much going on. And finally, probably, this snuck in as the biggest story of the week for crypto, but the SEC and the CFTC delivered a landmark crypto clarity response this week on March 17th. So they finally drew the line. Most crypto assets are not securities. So we've been waiting for this silly Clarity Act, but maybe we just needed this statement. But on March 17th, both organizations issued a 68-page joint guidance plus a formal memorandum of understanding that for the first time lays out a shared taxonomy for digital assets and confirms that most crypto assets are in fact not securities. So the framework sorts tokens into 4 main buckets. By the way, this would have been so helpful for you and I designing digital asset economies the last several years to know what we're allowed to say and not say and the language we're allowed to use. But basically, these 4 main buckets are digital commodities, stable coins, digital tools like utility or governance tokens, or maybe World Liberty Finance tokens from the president, or digital securities. And they all apply an updated Howey test. So they've updated the Howey test only to the last category. Bitcoin, Ethereum, Solana, XRP, and most large cap layer ones are explicitly treated as digital commodities and not securities. So that's they're probably big collective sigh of relief from those organizations right now. And the agencies are also signing a landmark MOU committing to align definitions, coordinate enforcement, share data, and streamline dual registration, so exchanges and brokers don't get double regulated by two different rule books, which is actually pretty good. That's very useful. So yeah, this is a massive story. I don't really know the implications on this for the upcoming Clarity Act vote, but maybe this settles a lot of it beforehand, essentially.
Yeah, I mean, this really does this undoes like years of violent pursuit by former chair Gensler, and like this is maybe the biggest story of several years within the world of Web3 or crypto, if this is enforceable and it moves forward. Obviously this is just a guidance. We're not sure what that roadmap looks like by fitting this into enforceable law. But again, it's the clarity that most people were looking for when launching altcoins or digital assets for a number of different reasons. So I'm not sure what this is going to do to the markets. I don't know if it's going to kick off alt season 17.5, but nonetheless, it's great regulation that many people have been waiting for the better part of half a decade.
Yeah, especially token economics designers.